let's take a look at the Ghanaian story. We know that there was much excitement at the start of the year, and that all because of the kind of development we were seeing specifically in the oil sector. Has development so far this year met up to the great expectations that were set at the start?
Well, they've been very close, but not quite. I mean, what you had at the beginning of the year was expectation that oil volumes would be ramped up quickly from 45,000 barrels a day to about 120 by July, August this year. Unfortunately, we're still sitting at 80, 85. We're only going to hit 120 Q1 next year. So from that perspective, in terms of the actual volumes, there has been a slight undershoot in terms of what the expectations were at the beginning of the year. But if you think about the sentiment in Ghana is still relatively positive. There's massive spillover into things like financial services, communication services are doing relatively well, trade is doing great, and the economy is really pumping. It is the fastest growing country in Africa at the moment, and it's the second fastest growing in the world if you take away the likes of Qatar.
Let's talk about managing that growth though, Michael, because as we've learned from experiences in other countries like Nigeria, you know, management of those revenues moving forward is key. How has Ghana managed to actually settle that debate on whether to save or spend its oil revenues, which is often subjected to much politicking?
That is correct, and I think the Ghanaians have learnt a lot from the Nigerians, so to speak. So what Ghana did before the oil production actually started was to come up with the Petroleum Revenue Management Act, which stipulates exactly how much could go into current budgets for each year, exactly how much could be saved each year, and it also tells you what the average oil price and the quantity assumption should be. Now, unlike Nigeria, for example, where the level of prices assumed at the beginning of the year for budgeting purposes is very subject to political discussion and horse trading, in Ghana's case, it's very objective. You have a 7-year average prices, 4 years of history, current year, and then the next 2 years expectation put together. So it doesn't matter where oil prices are or what politicians want to do. The reality is the numbers will be determined irrespective of what politicians want to do. Similar story with the quantities as well. So that's how they determine the budgeted oil price revenues. And then also, according to the legislation for each year, you cannot spend more than 70% of all revenues. And you saw that in the current year's budget. Roughly 70% of the expected revenues for this year was allocated to budget, of which a significant proportion, virtually all of it, goes into capital expenditure.
So overall, from what you're saying, it seems like you're constructive on both the direct and indirect economic benefits for oil in the country, and you alluded to it in your first answer, talking about the spillover effects into other economies. So let's take a look at that and look at how Ghana is actually leveraging off stimulating a wider and more diverse economic base.
So look, at the moment, remember, oil production really started in December 2010. So you only had, for argument's sake, 12 months of oil production. It's very early to start seeing the impact just yet. So I guess you start seeing the impact from next year onwards. There's massive commitment to infrastructure spend in Ghana. There's road networks that's being put in place. There's the significant gas infrastructure that's not going to be put in place at the Jubilee field to help, pump the volumes at the moment, which is one of the problems that you have the 80,000 instead of 120,000 because the gas infrastructure hasn't really been brought up to scratch because of the financial constraints. All that's been addressed at the moment. So once that's all done, and obviously the positive sentiment, we found oil, we're going to make a lot of money. It draws a lot of businesses. You think about it, multinationals already are moving their capital away from the likes of Abidjan and so on, Lagos and so on, into Accra already. The construction sector is booming. I mean, you're talking about double-digit growth pretty much across the board. And these are all sectors that are hopefully going to pick up steam over time. And hopefully once the Ghanaian authorities continue to direct the oil resources correctly, we should see continuation in spillover into the other parts.
Of course, there's positive sentiment on that front. On the other hand, we have seen some negative sentiment come through, and that specifically when it comes to the mining sector. I mean, we had Goldfields not so long ago causing quite a stir around the raising of mining royalties or taxes over in Ghana from 25 to 35%, and said that it could put a big dampener on their future investment plans into the country. To what extent is that acting as a pull in the opposite direction?
Well, it is, but let's face it, the reality is it doesn't matter if it's Ghana or any other country. You think about it from A to Z, from Australia to Zambia. You've got all these governments trying to get more resources coming through from the oil sector and the mining sector generally. And I think in Ghana's case in particular, it's probably fair on government because what you have had is a lot of the mining companies take advantage of tax structuring. For example, initially you were allowed to write down up to 80% of your capital investment in year one over a 5-year period. Now you can only do 20% in each year. So what you had is cross-financing, by a lot of mining companies. And therefore, despite the boom in commodities, the government was receiving nothing. And that's why they've come up with a more hopefully what would be a tighter hold on the country's resources. After all, the resources belong to the country. I don't see why the government cannot tax it and enjoy part of the benefits together with private sector investors. And that's what's happening. To the extent that impacts on investment, yes, we know that it will pull things back a bit, but I don't think that's going to be significant. 10% extra in taxes for me is not the end of the world. And obviously, you would expect mining companies to complain. It doesn't matter where they are, they will complain.
Absolutely. That within the mining space. Let's look at other sectors that are developing, because we know that, when a country gets excited about one sector, sometimes a lot of focus gets placed on that sector and a concentration gets lost on other sectors that have been contributing to its revenue in the past. And in this case, agriculture has been a big contributor to Ghana's GDP.
Agriculture has been a big contributor to Ghana's GDP, but very related to tax revenues. It contributes a lot to employment and a lot to growth. That's why it doesn't matter what happens to global growth. Generally speaking, Ghana's economy tends to trudge along between 4 and 7% because a lot of that growth is agriculture. Pretty much the same story in Nigeria as well. So agriculture is very important to the country, but in terms of tax revenues, it's not really the biggest. I mean, you think about the history of Ghana. In the early 80s, the cocoa farmers in particular were taxed. They were getting less than 30% of cocoa export proceeds. Obviously, that's all changed now. They're getting roughly 75, 76% at the moment as we speak, which is why cocoa production, for example, has hit the million-ton mark this year. And that should continue to do well next year once the Ivoria and extra import from Ivoria falls out of the numbers into 2012. Hopefully, by 2013, we see that picking up again. So, yes, look, there are negatives here and there, but generally speaking, I think Ghana has a positive story to tell.
When it comes to the macro picture, having said all of that, you aren't as constructive on the currency side of things. So take us through that, because it seems that it's the country's current account deficit that's standing front and center of it all, and bearing in mind that next year we are heading into an election period.
That is correct, and that's what is my concern. I think if you take it line by line on the export side next year, you're probably going to see a slowdown in export volumes because the world is not going to be a great place to be. More than a third of Ghana's exports go into Europe. So if you have a European recession, clearly some of the imports coming through from Europe, would come under strain. So we see slightly lower export volumes. Also think about the cocoa sector. One of the reasons Ghana has done so well with cocoa exports this year is because some of the cocoas come through from Cote d'Ivoire into Ghana because of the problems in Cote d'Ivoire. What you've also had is some of the leakages, previous leakages from Ghana into Cote d'Ivoire because of the better pricing in Cote d'Ivoire has all stayed within the country. So the combination of the two has led to significant performance this year. You're not going to get that next year because the Ivoria situation is a lot more stable now. So you'd expect the Ivorians to export their own cocoa and not reroute through Ghana. So that means Ghanaian volumes are probably going to go down. You think about gold exports, similar story with the world, contracting. You probably see some contraction in gold exports as well. And on the oil side, all the production volumes are hitting 120 barrels next year. The reality is you may not be able to sell all the oil you produce. So on the export side, there's a bit of a pullback. And then you look at the imports. On the import side, clearly, with the discovery of new mines virtually every quarter or so, the reality is that there's going to be a lot more capital imports coming into the mining sector. And a lot more. Remember, the economy of Ghana is very, very reliant on capital infrastructure to function. So you will have lots of capital imports coming through. That's not going to slow down significantly going forward. The combination of those two are going to lead to a wider trade deficit. And then finally, on the net invisible payments, remember, a lot of the single largest line item in the BOP is the unrequited transfer from Ghanaians staying overseas. Now, with the global recession, that's pulling back somewhat. You're most likely going to see some contraction in those inflows as well.
So a fine balancing act that the government's going to have to play moving forward. Certainly a scenario that we'll be watching as we move into 2012. Sure. Thanks so much, Michael, for your time this afternoon.
Thank you very much.